Hello, everybody. Hope you have a nice weekend. Goes by too fast, like always. But let's take a look at SPY. And I think that this week, this market's going to be, as markets go, pretty easy to read, which means there's going to be money to be made. Sometimes things are kind of confusing, sometimes things aren't. Uh, I am wrong a lot of times, I'm right a lot of times, whatever. Let me just point out what I'm looking at, and you could kind of draw your own conclusions. But like I said, I'm pretty confident that we're going to get some kind of a correction. I don't think it's going to be anything major. I don't think the market's going to crash or anything like that. But anyway, let's look at SPY. So, a lot of times markets get to price levels that were former peaks and they tend to stall out and reverse. Now, notice how SPY is getting close to 430, pretty much close around 428. I'm not going to argue about 8 cents, right? Just say it's 428. Back here in August of last year, guess what? We had resistance around 430. Now, if you look at a chart the right way, okay, you should be looking at it through the prism of what does this tell us about supply and demand? What does this tell us about psychology? There's a lot of really bad technical analysis out there. I would, as a matter of fact, say the vast majority of it basically just sucks, okay? So I hate to self promote, but the marketing people are always like, oh, you got to promote yourself, blah, 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 blah. All right, well, whatever. I was the head of trading in three different institutional funds. I worked for Gabelli, I worked for Cohen, two of the greatest money managers in history. So I've been around the block a few times. And I'll tell you this, a lot of retail traders think that these great traders like a Steve Cohen or a Paul Tudor Jones, they have some secret system. And the truth is they don't. Okay, the difference between them and a regular trader who's not as good is that they understand psychology and they view charts through the prism of supply and demand. Some of these technical analysis analysts out there are really just, frankly, disgraces to the profession. They talk about these weird things like Fibonacci and Gann theory and Elliott wave. I mean, to me, that stuff is science fiction. If I want science fiction, I'm going with Star Trek, original Star Trek, okay, with Captain Kirk. I don't like the newer one. But anyway, now, why would there be resistance at a former peak? You can see here, this was a peak, and when we got here, we got resistance. Well, there are people who bought back here who regret doing so when the price goes lower, and they tell themselves, hey, I made a mistake. I want to get out, but I'm only going to do so if I can get out at break even. So you have people who bought back here who've been waiting for basically a year to get out of their positions at break even. So you're going to have these remorseful buyers placing sell orders around this 430 level. That could create resistance. Let me step back. What is resistance? Well, if a market's moving higher, there's not enough supply or sell orders to fill all of the demand or buy orders. Remember, supply and demand, economics 101, that's what we're looking at. When we get to a resistance level, all of a sudden there is enough supply. That's where the sellers kind of come out of the woodwork. All right, so there's a good chance we're going to have resistance here. We are 2 points away, and it's $430. So we're almost there. So, I mean, I'd be looking for a kind of a move lower this week. Now, second thing, notice this red line here. This is what we call a Bollinger Band. This is two standard deviations above the 20-day moving average. Now, why is this important? Well, a lot of and I would even dare to say most of the algorithmic trading models that are out there these days are based on statistics. Statistics tell us that 95% of all trading should be within two standard deviations of the mean. So if we exceed this threshold, it's going to draw sellers into the market who are going to be expecting or anticipating a reversion. A lot of trading models on Wall Street are based on this concept of reversion. Notice how here we got above it where we exceeded the threshold and then sell off followed. We got above it here a little bit of a sell off. Nothing is perfect. Sometimes it just something gets overbought. It just tells us the trend is going to slow down. But look here, we got above it and then we had a big sell. So if we go back over this chart and we look at where we are here and we go back a year, based on this momentum indicator, Bollinger Bands, this is the most overbought the market has been in a year. Overbought means something is trading at a level that's above its typical or normal trading range, or what would be its historical trading range. Again, this draws sellers into the market. So resistance is a large amount of investors trying to sell around the same price. Overbought conditions draw sellers into the market, sets the stage for a move lower. So that's what I'm looking at. Watch this 430 level. Now, the most important thing to watch. Oh, you're welcome. Okay. Yeah, I know I make sense. You're welcome. Thank you, everybody. Yeah, there's a lot of garbage out there. I just tell it like it is. Now, you've probably heard, unless you've been living under a rock, and maybe you have been living under a rock, depending what rock it is, that technology has been pretty much the only thing that's been strong. And that was true until Friday. We saw some really strong action in the financial sector. The S&P 500 is made up of 11 sectors, and different things are in the driver's seat at different times. And for the last 2 weeks, it's been tech. But on Thursday, Friday, we had some strength in healthcare and financials, but I still think right now tech is the most important thing to watch. This is our technology sector. This is an ETF, XLK. It's a SPDR, Standard & Poor's Depository Receipt, that tracks the technology sector. When I first started doing this stuff, 3 decades ago, it was hard to get charts of the different sectors and industries because the companies that publish them, they want to sell them. But now we have these ETFs that track them, which makes our life a lot easier. So at stockmarketjobber.com, we go through the sectors. If you get insight into what's going on in the sectors, it helps you understand what's going on in the broader market. Now, here is the main thing to watch this week, and I will be talking about this a lot, okay? So make sure you check back. Now, oh, and please sign up and give me some, I think they call them like yeses or approvals or whatever. Resistance, will this important level of 163.50, which was resistance, convert into support? Okay. When markets are going higher, levels that were resistance can convert into support. In the market, some price levels are more important than others. That's just how it is. Sometimes we know why a level is important. Most of the time we don't. But we don't need to know why. We just need to know that they're there. Now, when market's going higher, what's a common emotion or a common psychological thing? Remember, we got to look through charts through the prism of psychology. We get seller's remorse. People sell, the market moves higher. A lot of the people that sold, they say to themselves, "Damn, I shouldn't have sold. I regret selling. I'm going to buy my shares back, but I'm only going to do so if I can get them for the same price that I sold them at." So, because of this, resistance can become support. We see this back here in October through December, all right? People sold here. They thought they did a great job when the market went lower, but then it goes higher. A lot of the people that sold here are like, "Oh man, seller's remorse. I want to buy my shares back, but I'm not going to pay more than I sold them for." So resistance became support. Same thing happened here. Resistance became support, all right? Now this is probably December into March. What happened here? Resistance became support. Okay, do you understand the words that are coming out of my mouth? Some price levels are more important than others. If you know where these price levels are, it's like a map to the market, and it helps you understand where we're going, and it gives you insight into where to place your orders. In other words, something's going up, you want to buy it, but you think it's ahead of itself. It starts to reverse. Where are you going to buy it? Oh, maybe at a former resistance level. That's probably where we're going to find a bottom, like we did here and here and here. So let's go into the current time. Resistance, will it become support? If it becomes support, this sets the stage for another move higher. Now, as we've seen, the market's really overbought, and we might need to spend a couple days consolidating. But when markets don't go in straight lines, they go in a staircase of trading ranges. And when a market's moving up, the level that was the top of the trading range becomes the bottom of the next trading range. Resistance becomes support. Resistance becomes support. So this is what we need to watch. If this resistance around 163.50-ish becomes support, there's a good chance that we set up for another move higher. I think we're going to need to spend a couple days consolidating because we're so overbought. But if this resistance doesn't remain support, it has been for a few days, but if this comes right back down, if XLK comes back down through this 163.50 area, it's a good chance we get a decent sell-off, and then we can make some money on the downside. All right. Thank you, everybody. I hope to talk to you soon.